In this chapter, we'll be discussing about repo rate. So when we need money, we take loans from banks. For these banks will charge some rate of interest. Okay. Similarly, when banks need money, they might have a situation, right? They might have a situation where banks themselves need money. They approach RBI. So we discussed earlier that banks maintain some SLR securities, and as per RBI rules, banks must invest 19.5%. That is the current SLR in SLR securities. So it might so happen that bank may have SLR ratio above that ratio, say 22%. That is, the bank is holding more SLR securities investment than mandated by RBI. This can happen. It's not that banks will be investing exactly 19.5%. So it's an investment decision. Okay. So the board of the bank will decide what to do with it, what to do with the funds it has received, how much to lend, how much to deposit, how much to invest, in which securities to invest. Okay. So maybe they have decided it is 22% are invested in SLR securities. Now this bank has the cushion to bring it down to 19.5%. Okay, because now 22%. So say it wants to bring it to 20%, and it will still meet the minimum SLR criteria of 19.5%. This bank can borrow money from RBI by selling its surplus government securities. That is known as repo rate. So what is repo rate? Repo rate is the rate at which banks borrow money from RBI when they need by selling their surplus government securities. That is repo rate. Generally, these are short duration loans, say up to 2 weeks. Okay. So repo rate is the rate at which RBI lends money to banks against pledge of government securities. Actually, repo rate is the full short form of something called repurchase rate. It's called repurchase because banks will repurchase these pledged securities at a future date. Okay. After it pays back the money borrowed from RBI, it will get back the security. So it's repurchase. That's why it's called repo rate. Okay. So just like we've seen RBI changes CRR and SLR to control the economy, RBI can also change repo rate to control the economy. So higher repo rate, what does it mean? Higher repo rate means banks give their extra SLR securities to RBI and get money, but at a higher cost. So then what will banks do? Banks will now pass on this extra cost back to the customers by increasing their interest rates. So now customers and companies will be less willing to take loans. Companies will be postponing new projects or purchase of machinery, and so on. So a single change in repo rate will trickle down the entire economy. It will impact the entire growth. And the reverse happens if repo rate is lowered. Okay. So one thing to notice, whenever repo rate is cut by RBI, doesn't mean that banks will reduce their interest rates. Okay. It may or may not benefit. It's the bank's decision. The lending rate will go down only when banks reduce their rates called base rate, which we discussed. Base rate is the benchmark rates for each bank, and every bank's lending rate is linked to the base rate of that particular bank. So it might happen that RBI has cut repo rate, but this bank has not cut the base rate. That also happens. There is no rule that when RBI cuts the repo rate, it has to be passed on. The benefit has to be passed on to customers. There is no rule. So it's a bank decision. Some banks, that's why if you see when RBI announces repo rate cut, there will be some banks that reduce their rates and some banks that don't reduce their rates. That depends on the choice of the bank. So what happens is, in the absence of a cut in the base rate, the repo rate will not get transmitted to the individual banks. So banks will be taking into account several other factors to reduce the rates, base rate, like credit to deposit ratio and other factors. Okay. So the questions to be prepared in this chapter are: what is meant by repo rate? How does RBI control the economy by changing repo rate? And does a repo rate cut by RBI result in reduction in interest rates by banks? Usually, major banks like SBI, because they are government banks, they do follow it. But again, there is no rule that repo rate cut will translate into reduction in interest rates for the end customers.